So what is one stock you might want to stay away from? What's going on, guys? It's Ricky with TechBud Solutions. This video is going to be super straightforward, and it's based off of this article that I read from the Motley Fool, and it says, one stock I wouldn't touch with a 10-foot pole. I think that they highlight very key points that not a lot of beginners take into consideration when they see a stock go from highs of $171 per share when it was peaking back in 2021 to now trading at lows of $2 to $3 per share. A lot of beginner traders have a lot of hope. They always like to take the what if. What if I buy $1,000 worth of it here at $3 and it goes up to highs of $20? I could potentially make a few $1,000s, 100%. I mean, I get that mentality, but now it's also taken into consideration on maybe why it has sold off so much. You have to think about that. From $171 per share now to $3 per share. It's lost like 98, 99% of its overall value. And it's for a specific reason. One of the big things that you want to first begin to ask yourself is right now, the markets are peaking, right? The NASDAQ, S&P 500, a lot of companies are thriving. They're at all-time highs. Amazon, Nvidia, Apple, Microsoft, the list goes on. These companies are doing exceptionally well. But then we have companies like Peloton that even during these conditions where those companies are thriving, Peloton is not doing well. So if the markets are peaking, then think about this. What happens if the market begins to downturn and the market begins to sell off? Conditions become even less favorable for something like Peloton. And I think that was a key highlight of really talking about where we are right now as a market as a whole, but then also taking into consideration the current conditions that this company has to potentially thrive on. But even during these exceptional markets, it's not even thriving. So it looks like things can only get worse if they get worse for the overall market. Something to take into consideration. Now, talking about the overall financials. So shares of Peloton currently trade down 98% after their peak, a milestone achieved in January of 2021, like we highlighted. While on Wall Street, the hottest stocks during the pandemic, which again, Peloton was definitely one of them. Zoom, Zillow, if you guys remember all of those things were all peaking and doing exceptionally well. Carvana being one of them. It has been one of the most disappointing ones, and no question about that. So when it comes down to the actual fundamentals, during the fiscal 2024 third quarter end of March 31st, the business reported sales of $718 million. I mean, that's a lot of revenue. And when people see that, like, oh, this is not a crappy company. Remember, revenue is what it reported. Not only is it down 4% year over year, you might be like 4%, that's not that bad. Why is the market overreacting? The thing that I'm trying to point out and highlight is with producing $718 million in revenue, let me make sure that I can pull it up for you guys right here. They had a net loss of $167 million in their last fiscal quarter. So out of that overall revenue, they still even lost $167 million. How long can a company continue to burn through that capital? That's like, you making $750 million, but you spent $1 billion. Well, yeah, you made 750, but you spent $1 billion. So therefore, you're still in the red. And that's the thing that we need to take into consideration is that, Peloton has announced some pretty good things that you would think would have driven up demand or maybe driven up the overall sales and revenue with partnerships with Amazon and Dick's Sporting Goods. But guess what? It still has not, right? The net loss came $167 million in the last fiscal quarter. The new management team has embarked on sizable cost cuts because, again, it's really expensive to run these type of companies where they're spending a ton of money just like they were back in 2020, 2021 when conditions were peaked, right? And then now taking into consideration, they need to cut back on spending to get back in the green. And the thing that they point out is how important it is to take into consideration that Peloton just not, the idea of this thing beginning to recover is not the only option. The idea of Peloton failing is also a very likely scenario, which is something that not a lot of people want to accept. So Peloton's market cap of $1.2 billion is less than half of its trailing 12-month revenue of $2.7 billion. That's how little hope they have, right? So this company produces 2.7 billion in 12 months, yet their market cap for Peloton is 1.2. And we can pull it up right here. 1.28 is the real-time market cap for Peloton. So what they are telling us is, I mean, there's a ton of companies out there, right? You can look at Amazon, you can look at Microsoft, you can look at Google. Those, I'm sorry, not Tesla, but Amazon, Apple, Nvidia, those companies are all worth $1 trillion plus. None of those companies make over $1 trillion in revenue a year. But guess what? It's based off of valuation, and valuation has a lot to do with future projections. And that is the thing that we need to take into consideration with this, is that its market cap is 1.2 billion, yet on a yearly basis, it produces 2.7 billion in revenue, but it still loses money. So therefore, investors, Wall Street as a whole, doesn't have a lot of hope for Peloton based off of what it's making per year and what it's actually valued at. And that is why we are seeing that, I would say, difference between the correlation between its market cap being less than what it actually produces per year. Because to maybe the average person, they would be asking that same question. Well, why does Tesla trade at such a higher market cap than what it produces per year, right? Or why does Peloton trade at such a lower market cap than what it produces per year? Not only is it based off of what it actually makes per year, but also based off of future projections and hope, right? The hope that this company can continue to grow. And it seems like Peloton just doesn't have a lot of that hope. So one thing that they do highlight, which again, I think it's really important, is always the what if. And there are some investors with really high risk tolerance that do want to take Peloton into consideration because it has somewhat been trading sideways. And a lot of people think that, oh, maybe this thing can begin to all of a sudden begin to recover. But then when that's a very hopeful approach, or that's an approach where, again, you do have to have a pretty high risk tolerance, because if we use the little trend line tool here from the current price point, if it does go to, $40 per share, that's nearly a 1,000% return. So with $1,000, that would yield an insane ROI, but that's a huge what if. What does have to happen for Peloton to get back to just $40 per share? It would have to be something pretty substantial, right? So again, not just taking into consideration that it could possibly recover, but the idea is also that it could potentially file for Chapter 11 bankruptcy and then get removed from the New York Stock Exchange, right? And then at that point, whatever it is that you had in the company, you ultimately end up losing or end up consolidating based off of if they actually end up paying you at whatever it's worth with the price per share. Because when a company announces bankruptcy, the stock can plummet 50, 75, 90%. So again, just always take into consideration that the cheap can always get cheaper. And I think it's also very important to understand is the fundamentals of a company, of why is it that it's selling off so much. It's always not just technicals that you can trade off of, but also understand the fundamentals, especially if you're choosing to do this with a very bearish stock that is selling off over a long period of time and trying to enter a hopeful position. I think that this is great for beginners to understand. So anytime that you think that I'm just going to buy this and it just has to go from $3 to $6 and I'll double my money, but you don't understand that it's a failing company that's burning through capital quarter after quarter, and that Wall Street as a whole doesn't have a lot of hope, and you're waiting for a Hail Mary type of news to come out for you to be able to try to double your money. And ultimately, more often than not, you'll end up losing money, right? So just something to take into consideration. I know a lot of you guys might not even care, but the thing that I love to remind you is, again, anytime markets are down or anytime markets are up, it's always important to take both sides into consideration and inform yourself. So I appreciate your time. I hope that earned your thumbs up. I'll see you later today for our Sunday stock talk. And don't forget, again, I will be trading live tomorrow right at market open. I hope to see you there. And that's that second link in the description down below. You can sign up today and then you'll be able to watch me trade live as soon as tomorrow. We'll see you then. Take care, team.